Welcome to the Global Tech Leaders Podcast, where we help business leaders and individual contributors with actionable insights to hit their number and figure out the nuances of truly operating a business globally today, squeezing the essence of the lessons learned from the planet's top tech leaders. This is your guide to joining the fast track to global market scaling.
So on today's show, we are joined by Richard Thornton. Richard is living the dream right now, quite frankly, as a non-executive director and various board positions, having had a successful exit from Cint, having been their chief commercial officer. So Cint is very much in the data and analytics space, which powers organizations to make good decisions. They've had a series of funding and now Richard has successfully navigated through the growth of that organization and has now moved on to help add value to other organizations, which is a unique from a guest perspective on the podcast thus far. So very keen to explore that. So welcome to today's show, Richard.
Thank you, Ross. Great to be part of the show, and thanks for inviting me on.
My absolute pleasure. Well, I was keen to have you, given your rise to fame around being chief commercial officer, and you obviously had a global focus before that, and we talked around some of your trips before we started to record here around, you know, the APAC piece, the North America piece, and sorry, should I say New York and Singapore. But I really want to get into what it was that led you to that. I mean, take us through your kind of formative years in education, some of the decisions you make. I'm always keen to understand the fork in the road and why people take a certain path and what leads them to that journey. So maybe just take us through that if you would.
Yeah, of course, sure. And I guess, like sort of many individuals you've spoken to on this podcast, it wasn't a sort of linear path by any stretch of the imagination. Definitely some sort of bumps in the road throughout my career, and actually it sort of dates back to when I first sort of left school and went to university. I actually sort of flunked out of university first time round, did a sort of year or so in business management, and at the time, for various reasons, just decided to kind of pull the plug on that and sort of take a sort of gap year, as I guess it's known now, to sort of reassess what I wanted to do. So it wasn't the sort of cleanest of starts for me, actually, heading into sort of university. I did subsequently go back and studied international business and marketing. So sort of got my BA honours in London, and then from there, I actually sort of fell into a research analyst role, which I did for a couple of years before becoming a senior analyst for a company called Cap Ventures. Cap Ventures was a sort of challenger consultancy business to IDC and Gartner, based out of Boston, but had a European HQ in Luton, of all places. So I was doing the commute, the reverse commute, if you like, from central London out to Luton every day, about a 4-hour round trip, on a sort of starter salary, which was an interesting experience, but really sort of learned my kind of trade, if you like, in terms of the core fundamentals of being a sort of analyst and having a sort of consultative mindset when it came to working with customers and partners. I was very fortunate, actually, early on to work with large sort of global customers such as Hewlett-Packard, Xerox, Canon. Cap Ventures was in the sort of digital imaging space, and we were offering advisory services and consultation around market forecasts, trending, product placement, product positioning. So got to travel at a very early age, actually, around Europe. Used to sort of attend the huge CBIT conference, which was in Hanover. Was a kind of regular highlight. And then after 4 years, I actually got a phone call out of the blue from a headhunter that was hiring for a new role within the kind of online kind of research space. So sort of adjacent to what I'd been doing at Cap Ventures. And it sort of felt like an interesting proposition at the time. I was sort of early 20s, was looking to sort of get a job back in London to kind of reduce the commute and freshen things up. And the company was Chow Surveys. Chow was backed at that point by Wellington Partners, one of the kind of preeminent sort of VCs here in Europe. And they'd been investing in the Chow business and wanted to scale it beyond Germany and the DACH region. So they were looking for someone to come in, set up Chow in the UK, and really build, the business from ground up, hire a team, sort of acquire customers and establish, itself in the market here in the UK. So I took the plunge, and actually looking back, that was probably one of the best decisions I made throughout my career. It was to get into, at the time, a very early form of what is now a significant part of the global data and market research.
Good headhunter, I'd say.
Very good headhunter, very persuasive, of course. And I just sort of, I guess kind of buckled up and thought, well, it sounds exciting. It was a small business, 30 employees, but they were, growing at sort of high double-digit growth. It was a tech-enabled kind of disruptive SaaS play, and it was an interesting business model, Ross, because it had a price comparison shopping portal platform, which was one of the leading price comparison tools in Europe at the time. This is back in 2003. And off the back of the price comparison portal, they were spinning off an online consumer panels offering, which they were then going to take to market research agencies that wanted to speak to consumers and collect data in a more efficient, timely, scalable manner. And back then, there were very few players offering this in the market research space. Research is, and still is in part, a very traditional industry that perhaps hasn't been as disrupted or influenced by technology as perhaps other industries have. And so, we were out there in the market in the sort of earlier years, kind of educating the market research space about online consumer panels and a new way to collect data for insights. And that ended up being an amazing journey. It was a fast ride from 2003 to 2008. We scaled that business from a couple of million euros or so when I joined to close to 25 to 30 million. And we were acquired in 2005, I think it was, by a large US player called Greenfield Online that was public at the time. They'd recently gone through an IPO, and they were on an M&A sort of path. And we were the second acquisition they made actually shortly after the IPO. So we very quickly went from being a sort of VC-backed, very independent, kind of high-growth European player to one that was now part of a much larger kind of American HQ'd and publicly offered organization. So I learned a huge amount, obviously, through that transition. And from a personal development perspective, going from being a sort of, privately sort of owned business effectively to one that was operating in the public domain, very exposed, significant shareholder responsibilities was a huge learning curve. And at that point, I was still in my late 20s, and I'd sort of worked my way up through individual sales, kind of contributor roles, to managing, sales teams as a director, to ultimately becoming the co-European managing director at the age of, I think, 27 or 28. So, awesome. If I look back now, and if I was being sort of, brutally honest, I was probably not ready for that role at the time. It was managing and having responsibility of around 300 employees in Europe, and a P&L of probably 30-40 million in revenue at the time. And I was sort of wet behind the ears, wasn't classically trained in sort of management, had very little kind of formal training at that point. I'd sort of just organically grown, my career and worked my way up through the organization. But you sort of learn fast or fail, and I thankfully was able to surround myself with great people around me, and had a very sort of understanding boss in the US and co-managing director in Europe that sort of helped me through that period. And I left Chow late 2008. The business was sold to Microsoft for $500 million. They were buying it to leverage the price comparison shopping portal, which ultimately got rolled up into what is now Bing. And at that point, I saw it as a sort of natural kind of exit sort of opportunity. So I stepped out, took some time off, traveled a little, went over to Asia, spent a few months there, and then that summer in 08, actually, I had a call out of the blue by a guy called Bo Matson, who is the founder of Cint. And Bo and I had known each other, through industry circles, and Cint had become a customer or partner of Chow's at the time. And Bo said, look, we've just taken on Series A. We've raised, I think it was 8 million through Creandum, the VC in the Nordics at the time. We want to scale now beyond the Nordics. Can you come and help us? We'd love to have you on board. And I flew over to Stockholm probably a couple of weeks later, met the board, met Creandum, met the exec team there. Really small business again, felt very similar to when I joined Chow back in 03. It was sort of 30 employees, a couple of million euros in revenue. And I love Bo. I just warmed to him as a founder, as an entrepreneur, and I liked his vision. The vision being he wanted to bring trading and exchange principles from the financial markets, which was Bo's background, into the world of market research, and aggregate up essentially the supply chain on the supply side, and through a platform and SaaS offering, make that easily available at scale and in real time to the buy side, which were the market research agencies looking to collect data, in a more efficient, sort of scalable way. This was a really unique, business model and concept at the time. This is 2008, 2009. And there was no one else sort of thinking like this in the space. So I joined to set up the UK, and within 12 months, I had been appointed head of global sales and client services, and then probably a couple of years later stepped into a COO role, which I did for a number of years until evolving into the CCO, which I probably spent the last 3 or 4 years of my career at Cint. And through that journey, Ross, you alluded to it, I went through, the various types of ownership, which again, as sort of, I guess, sort of skilled and tooled me up to what I'm doing today. So Cint was originally, it was founder, owned and bootstrapped. Then, it did Series A, Series B, Series C with the VCs, Creandum, Prime, the two sort of leading VCs there. And then in 2015, Nordic Capital, one of the kind of larger European private equity businesses, acquired the company, and we took it sort of on a growth journey under Nordic with the management team until the recent successful IPO in February this year. And with the IPO, I sort of planned for probably the best part of 12 months that I would leave with that event, and had a very understanding board in Nordic Capital and boss in Tom Bjornman, the current CEO of Cint, and that's what I did. I helped prepare the business for the IPO, was part of the deal team that sort of worked on readying the company, and then I've done some sort of post IPO consulting for the business until the last few weeks, and here we are. I've now got a sort of clean break, and as you alluded to at the start of the podcast, I've sort of started to build out my own portfolio of businesses that I'm now trying to help and work with, including the founders, and and some mentoring and coaching alongside that as well.
Wonderful, wonderful. And I definitely want to get to that. But just to wind back a small bit, I'd like to dive into some of the things you mentioned around data and scale. So I've had the fortune and misfortune, I suppose, of being involved in two types of businesses. One is a super hyper growth startup, and the other is a very mature business that it's about maintenance. And there's two main differentiators between those businesses, and that comes down to the data and it comes down to the people in my mind. So when I was in a mature business, I saw calamitous decisions made on gut feel, on finger in the air stuff, and it was not long before those decisions played themselves out and individuals making decisions weren't successful making those decisions. One of the things I love about startups and scale-ups is that the decisions are made on the data because they have to, quite frankly. And then in that context of that scale-up piece, you've got two types of individuals. You've got builders and you've got operators, as I call them. Builders are folks who've done what you've done in my view, which are they take the data and they make good decisions based on the data. But I'm really keen to understand, like, when you're sat at your desk and you're in either of the two examples you stated there and you shared, and it's Monday morning and you're scaling, how do you physically go about that process? And secondly, you mentioned there about, you felt you weren't ready, etc. You didn't have any formal training, and none of the best guys do, but they're also open-minded enough to say, do you know what, I don't know all the answers, but I'm going to go and find them and seek out the right folks who can help me find those answers and give me support and stewardship. But I'm just keen to understand, like, when you're sat at your desk on that Monday morning, coffee in hand, what next? How did you physically execute upon that journey, and how did you go about managing that success in a very succinct way? Because you've got a lot of reporting dependencies around boards and so on that are looking to you for direction. Maybe just take us through the physical elements you executed upon, if you would.
Yeah, sure. Great question. And you sort of touched upon a number of the kind of core components there, I think. First of all, I mean, you need a framework. I think any good business, whether you're, in a very sort of scrappy kind of early stage, pre-seed, seed sort of environment, or you're a maturer, organization that's perhaps sort of slowed down on growth, but still, trying to sort of scale, you need a framework. So the thing that I learned, quite early on in my career was that you can never sort of over-plan in terms of strategy and execution. So and to do that, you need a number of key components. One is people. For all the talk of technology and automation, digital transformation that there is right now in the business world, fundamentally, good companies are built around great people. And so I think you need to make sure that you surround yourself with people that you can trust, but also importantly people that are prepared to challenge you and your way of thinking, and offer a kind of alternative perspective to sort of how you view the world through your lens. So people is key, and for me, the underlying sort of I guess traits there are trust. So build a trust-based culture and environment, and empower your people as quickly as you can, as early on in sort of the scaling process. Because if you do that, you'll quickly cascade down and cultivate, I think, a sort of environment that is decisive, is decision-led, but also isn't in fear of failing. And I think that's really, really key, particularly in high growth organizations that are running hard and fast and need to be very agile in how they operate. So people is key. I think toolkit, and particularly systems, is also important, and that evolves, of course, depending on the maturity and stage of your business. Obviously when you're a startup and you're sort of trying to be scrappy and mindful of costs and general overheads, tooling up with the right stack, if you like, is more challenging. Comes far easier later on in your journey. But I found early on, building your business around a really solid tech stack, not least CRM, is critical. If we go back to the kind of data-driven kind of business ethos, you can't do that without having systems in place that manage data and allow you to take a very metric-driven approach to running your organization. It's what we deployed at Chow and became obsessed about actually at Cint, particularly in the latter years, were things like OKRs and KPIs and creating a very measurable environment to determine success. The more objective, less subjective you can make the environment, the better. But you can't do that unless you've got appropriate systems supporting your data and your dashboard. So people, tools, and then I think I speak a lot now with the companies I work with about strategy, structure, and people in that order. And you need a solid structure, strategy in place that the organization is aware of, understands the rationale behind, and critically is able to answer that question, what is in it for me? What is my purpose within the broader strategy? So strategy first. Structure is about target operating model and organizational kind of structure of how you sort of set up your kind of managers and teams. And then people, of course, are I guess the kind of bricks and mortar, if you like, of any business. They're the sort of foundation of the company. So I think that was the kind of formula that I would work with in any given business. And data runs sort of within all of that, but it's people, it's the systems, and then it's strategy, sort of structure around that as well.
Yeah, no, I can see how that would be absolutely crucial, that you can bring people along the journey. And for me, being a logical, critical thinker, it has to be done based on data. You need to explain to me why something works. I can warm to a person, but I need to be explained logically why this makes sense. And you can't,
it's difficult to create a sort of performance-based culture and accountability unless you pin conversations to data, and you make informed decisions that are underpinned by data points. I don't necessarily think that should be the be all and end all. I think particularly if you're a startup, that entrepreneurial spirit and that sort of gut feel that often a lot of founders have and sort of exec teams have, you need to sort of cultivate that as well. So there's a balance here to be found between following your nose and using the data to sort of help guide you, because the data to me should be part of a triangulation, or it should be a validation point, shouldn't necessarily be used in isolation. And I think that's really important, as well as you sort of understand kind of what tools you have at your disposal, and you sort of find what the right combinations are of those tools to get the most effective results.
Yeah, that makes sense. And you touched on something interesting there, which is the balance around the gut feel and the entrepreneur seeing that opportunity. And that's the art part of it. There's a science, which we kind of touched on there, we went through, but I think the art part is, well, I think it'll go this direction and this is why, but we'll manage that journey along the way. I'm curious to know as well, in the modern world, because I come from originally a family business background where there was a handful of people, my father, his brother, and then up to 27 people at one point, which was based on you grow a business through profit. And I think we learn today that those rules don't necessarily apply, and that funding is a key component of being able to grow. So on the podcast, we've had various people in the past in various geographies, but I'm curious to know from your own perspective what funding looked like in your world. You obviously have more of a Scandinavian kind of lean to this. And I'm keen to know how money played into the equation, and maybe were there some cultural aspects that fed into that in terms of their expectation on ROI, and what the stages look like. So for our listeners, if you wouldn't mind just breaking down kind of seed, Series A through BC and so on, and then ultimately IPO. I speak with a lot of candidates, obviously, on a regular basis, as do my team, and I don't think they fully appreciate the value of joining a early stage, well-funded organization that's well managed, because I had that opportunity myself. I had a household name in Dell versus a little small startup called Salesforce.com when I came out of university, and I had the chat with the old man, and it was, oh, go for the household name, son, you can't go wrong. And he wasn't wrong, but I just want to explore that a bit, if you would. Maybe just take us through, the funding, the cultural piece, and then the series, and just from a paint by numbers perspective, what do all of those mean for our listeners, if you could share?
Yeah, absolutely. And it is an interesting sort of journey that businesses sort of will go through as they go through the various funding phases. So typically speaking, a startup will be founder sort of created and bootstrapped initially. That could be for, a period of months, or it could be for sort of, 12 to kind of 18 to 24 month period, depending on how successful that company is at generating cash and having sort of capital to sort of reinvest. But typically, a startup will go out and seek kind of a sort of pre or seed round relatively early on. And what that round will do is it will enable them to use the kind of proceeds in typically, 2 or 3 key areas. One is to hire key sort of talent that is required for the next phase of the journey. A typical area is normally sort of R&D, so production development, and again, hiring appropriately to kind of fuel that part of the engine. And then, normally it's around sales and marketing for scaling. Most sort of pre or seed rounds, typically in the sort of hundreds of thousands, normally led by angel investors, so individuals that have a high net worth kind of value. There can be some small sort of VC fund involvement at that point. There's a number of funds across Europe that do specialize in sort of very early stage kind of seed investment. Normally the expectation would be that there is an MVP version of a product or a service at that point, and there's been some evidencing of the business solving a genuine problem or need, and having the kind of early I guess sort of formation of customers and a revenue stream. From seed funding, normally then a business would continue to scale, and you would think about a Series A round. Series A rounds are normally led by VCs. Again, typically that could be a round of anywhere from $500,000 to up to sort of 10, 15, 20 million, depending on size of the business. Obviously, can scale up to much larger amounts, particularly in the US, given market sort of size and opportunity there. And I guess the difference between a seed round and a VC-led round is VCs typically work to kind of a 10-year cycle. So the way they think about their fund cycle is first 3 years or so will be around deploying their fund, investing in businesses relatively early stage, and working initially with the founding team in terms of operationalizing and scaling that business. The sort of next 3 years of a VC fund will be about optimizing those businesses and going aggressively primarily on top line growth. And then the final 3 to 4 years is about exiting. So typically a VC will look at a business or a fund cycle over 10 years, and they'll deploy, optimize, and exit sort of in those phases. Culturally, VCs typically are about top line growth and putting the foot to the floor in terms of scaling the organization, acquiring sort of customers, and possibly sort of expanding the business either geographically or vertically, to really entrench themselves in their value proposition and offering. Most businesses will look at sort of a Series A, Series B, Series C. Series B, Series C typically will have the Series A investors follow on, but they may also bring in, new investors, fresh capital from outside. Sure. And then, from Series C, it's rare, but you can have sort of Series D. But typically thereafter, you would either look to exit to a much larger private equity organisation at that point, or you may go down the path of taking the company public and doing an initial public offering, an IPO. That's where I think you get the biggest cultural shift, is when you go from VC ownership to private equity ownership. And it's a journey I went on through my time at Cint. We went from VC ownership in sort of 2015 to private equity under Nordic Capital. And I think what private equity owners bring are a sort of wealth of kind of expertise when it comes to their sort of toolkit. A lot of them have a sort of operational arm that they kind of lift and drop into their portfolio companies, and they'll open up that toolkit to the management team. For example, they'll work with the big consultancies like Bain and PwC and Deloitte and Accenture, and they'll give you access to that resource pool for what they typically call value creation plans. Value creation plans are something PE firms love. It's a framework that is essentially a series of strategic initiatives or work streams that are aimed at further professionalizing an organization. They're aimed at filling in the gaps in terms of key personnel. They're aimed at buttoning down target operating model and, for example, putting in place appropriate tech stacks and KPIs and metrics so the business can continue to grow and realize the objective of the private equity owner. Because private equity typically works with much shorter fund cycles, so typically closer to maybe 5 to sort of 8 years tops. And so they're looking to really maximize their time as custodians or major shareholders of an organization to drive the greatest multiple they can. That could be Ross, either on revenue as a multiple. Increasingly, a lot of SaaS businesses are being positioned around gross profit or net sales, or it could be an EBITDA play. But I think that's the greatest difference from VC to PE, is that your P&L profile and the management of your P&L changes. Yeah. I think the corporate governance and controls change fundamentally under private equity ownership. There's a lot more regulation. There's a lot more governance and formality around running the business. And I would say that kind of entrepreneurial sort of spirit and culture that perhaps existed all the way through, certainly, seed and Series A, B rounds, starts to be challenged, actually, in terms of your identity as an organization and as a company culture. And that is really interesting. And that's why a lot of founders typically will sort of lead businesses up to kind of Series A, Series B rounds, but may not be the right founder to either take companies public or to guide the company under private equity ownership.
So I want to get into that, and I had a discussion on a podcast recently with Mark Pfister around this in the US, who talked this around, is a founder ready to become a CEO as well through those shifts that you mentioned. So that's very, very clear, and I think what I'm interested in learning is from a cultural leadership perspective, particularly at mid-management and downwards to the frontline troops, as it were. How do you keep folks on board when you've got this kind of, I don't know, euphoria around VC and it's super hyper growth and it's a 10-year outlook, and I'm not saying people join startups because they're risk averse. That's not the case. But there's like, we're going somewhere here. This is a 10-year runway, and then suddenly it shifts to maybe a shorter runway with PE, which is maybe a fraction of that. How do you keep folks on board from a leadership perspective when that shift happens? I think you mentioned 2015, for example.
Yeah, great question. So I think the truth is you won't take everyone on that journey with you. I think that's the harsh reality of kind of the evolution of organizations. So I think as a management and sort of leadership team, you need to be sort of honest with yourselves around that fact. There will be a shift in expectations, and there will be kind of a raising of the bar in terms of performance and accountability, and that won't suit everyone, including at times individuals on the management team. So I think there has to be a realization that there will be sort of more likely higher churn of kind of employees as you're going through these various phases. That said, I think there's a lot of sort of actions and activities you can take to ensure that as much of the organization does make that kind of journey with you. I think first of all, it's really important to have a North Star, and it's important to make sure that everyone in the organization, top down, bottom up, understands what that North Star is, and that's your I call it, and we used to call it at Cint, your BHAG, your big, hairy, audacious goal. What is your BHAG, right? And I think people love that, because most of us, like ambition, and we like to kind of shoot for the stars when it comes to where we want to sort of head to. That said, in terms of incentivizing people to get there, that's where you really do have to diversify and have variety within your armory, because what motivates you or I might be very different to your peer and your colleague, particularly when you start to break it down by geography and function and demographic. So you've really got to do a good job, I think, as a business and leadership team, to defining the North Star, being very transparent around direction of travel in terms of where the business is heading and why, critically, and then breaking that down into meaningful kind of objectives, key results, and how we're going to measure success. And then the sort of underpinning activities that everyone in the organization is going to contribute to enable us to edge closer and closer to that North Star. So it starts with, I think, transparency, honesty, and good communication. I think secondly, all good businesses today, need to understand the importance of company culture. And I don't think culture is something that you can force. I think in many ways it's organic and it has to come naturally, and it's often founder-led, particularly in kind of earlier stage startup businesses. The trick and challenge is how can you bottle up that DNA and make sure that it stays with the business as the business scales. Great example at Cint, fantastic Scandinavian, warm, friendly, open culture. Quite a consent-led organization when I joined the business. A lot of pluses around that. But as the business grows and wants to globalize, particularly moving into an American market that has a very different dynamic to it, how do you adapt yourself as leaders and as a business, but try and retain that heritage that has made you the company you are? And it's a really interesting conundrum, actually, to sort of solve. And we spent a lot of time with our head of HR and the management team and all facets of the organization, trying to understand, as a business, what can we do to ensure that as we open up new offices, we move into new markets, how does that Cint DNA remain with the business, and how can we ship it out as we grow? And so we created a kind of culture council. We created sort of various forums, both online and offline, to kind of cultivate communication and sort of openness. We use Slack effectively in the sort of latter years at Cint to really help underpin our sort of communication strategy within the business. Because if you don't get it right internally, you'll never get it right on execution externally. So it has to start from within with your own team. And I think if you can get alignment there, it becomes a far easier kind of step to take that story to market. So it shouldn't be underestimated. And it was something that Cint certainly we invested very heavily in throughout the organization, but particularly the management group.
Okay, so for our listeners, there is the template. That is how it is done, as it were. I want to shift gears now, if I may, to understand how you're bringing that knowledge specifically to some of the organizations you're a part of now. So you're a non-executive director on a number of boards, and you're adding value in a multiplier effect now with that experience. So it's the position you're in, as I said, living the dream. But maybe just share with us some of the work you're doing right now and why you're so passionate about it, if you would.
Yeah, sure. Living the dream. My wife will always make sure I remain honest. So living the dream to a certain extent, perhaps. Yeah, it's been an interesting sort of transition period, Ross, obviously from the daily cut and thrust and being in sort of the trenches operationally with Cint as recently as February, and then sort of stepping out, kind of unplugging, and now starting to build up my own portfolio of businesses, moving from that kind of operational sort of C-level role to a plural approach to work has certainly been an adjustment, and continues to be, as I step into the kind of world of board advisory roles and NED positions. But it's that diversity and that sort of freedom, if you like, that I'm enjoying, and I'm really looking to sort of harness now in helping other kind of tech-enabled early stage businesses and their founders, on that journey that I've kind of trodden through my time at Chow and certainly at Cint. And it's really about that. It's about how can I take my learnings, both the good and the bad, from that journey of sort of 2 million to 100 million in revenue, and taking a sort of helping take a Scandinavian business global and become a sort of leader in its space, and impart that knowledge onto founders and leadership teams that are going to embark on that journey, and they're going to encompass many of the opportunities, but also potential pitfalls that I've seen and gone through, and at times I kind of made the right calls, and at times I didn't, and I learned sort of the hard way. And it's about sort of now working with founders that I click with and respect and really believe in terms of their vision and kind of their North Star. But it's also businesses that have a commonality in terms of their makeup. So I'm working solely with sort of tech-enabled kind of sort of early stage, so either seed or kind of Series A or pre-Series A businesses from investment perspective that are today primarily working in the UK but want to expand internationally. And they are also SaaS offerings that are grappling with this challenge that most SaaS businesses have of probably offering too much of a service wrapper around the technology today, and they're all looking at how they can not pivot the model, but sort of pivot the revenue stream from being a hybrid model of recurring and service-based revenue to one that's kind of a purer recurring model. And so my kind of 3 core pillars, Ross, that I sort of focus on with my portfolio businesses are sort of scaling and growth, sales efficiency, and that's very much the data-driven kind of KPI sort of component that we were discussing earlier, and international expansion. I mean, there's more to it than that, but if you had to really sort of pin, to 3 sort of specific areas, it's those 3. And what's been really interesting actually is, whilst these businesses are often in different sectors and at slightly different stages, the problems they're trying to solve and encountering are actually all the same. they might initially look and smell slightly different, but actually when you really sort of look under the hood, they're all the same. They might just be coming at it from a different angle, or with a different sort of toolkit, but there's a lot of commonalities which, as my portfolio has grown, I'm able to then leverage, within that sort of ecosystem that I've built. And I've started to introduce, founder to founder and exec team to exec team in a number of cases, and they're learning from businesses within the portfolio, which is great. It's really good to be able to kind of orchestrate that. And sort of add more fuel, if you like, into where those companies are.
No question. Well, look, as we wrap up here, one final thing, from a mindset perspective, if you were to give advice to your younger self, or to somebody who's considering the path that you've gone through, what would that look like? What sort of snippets of wisdom would you be sharing?
I think, firstly, try and identify or get a coach or mentor early on. I looking back, had, I guess, mentors. I just didn't realize at the time, or didn't have that sort of formal label put on them. But I think, try and throughout your career, actually, sort of align yourselves with someone you would consider a coach or a mentor, and really lean on them and their experience, because it's worth its weight in gold. It genuinely is, to help you through your own personal journey. I think, secondly, never lose sight of the fact that business and industry and what we all do is about people. Regardless of how much we in the business world talks about, as I said earlier, technology and digital transformation and automation and platforms and software. Business is about people, and surround yourself with good people, like-minded people, but those that are prepared to kind of challenge you. And then thirdly, balance that by going with your gut. A lot of my best decisions throughout my sort of career have been because I've had the balls to take the plunge, and at the time it wasn't necessarily or it didn't necessarily feel like it was the safest decision, but actually looking back, it was without doubt the right decision. So I think coaches and mentors, people, and having sort of that kind of gut feeling, sort of sense for an opportunity. I think if you can combine those three things, you'll be in good stead for your career.
Very, very sound advice indeed. I can certainly relate to that. Having a family and responsibilities of my own, it becomes all the more prevalent, and decision making becomes all the more, I suppose, important and stress at that point in your career. But look, thank you very much for joining us on today's show. A ton of value for our listeners, without doubt whatsoever. I'd love to engage and speak with you again in the future if you're up for it, Richard. Thanks again. Yeah, absolutely, Ross. Thank you very much. Really enjoyed it. Thanks.
You've been listening to the Global Tech Leaders Podcast, designed for both established and aspiring career-focused tech rock stars, as well as helping leadership figure out how to speak global in today's multicultural world. For further details, check out sf-talent.com.